he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that one or two people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have two guys who are ahead of that and one knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette
I'm a writer for Bloomberg News for the global business team.
and Kim Basine
And I'm the U.S. luxury reporter at Bloomberg.
to find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW.
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
with violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas a Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now, so we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but This is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera, that is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. Yes. So at some point we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, you know, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is the spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in means
to a layman like
feathering
me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard. but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question: do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement at the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms, because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Live from New York and New Jersey, streaming on YouTube. It is Wednesday, July 22nd, 2020. And Jason, here we go again. The U.S. and China at each other. It is among our most read stories, I think, if not the most read for the day on the Bloomberg. China vowing retaliation after the U.S. closes its Houston consulate. I mean, markets not doing a whole heck of a lot, but I feel like here we go again.
You know, every morning when I wake up, I look at sort of the news alerts across our news wire and then New York Times, Wall Street Journal. Yeah. And when I see one that's like bing, 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 you know, it's a big story. This was on there, and it certainly is driving a lot of conversation, not necessarily driving the trade, which is interesting. We're going to get some details about what it means for investors, but what it may mean geopolitically and especially economically straight ahead.
Yeah, it's a big story. All right, let's get you going, though, on this Wednesday with a check on the trading day. Here is Charlie Pellet.
Hi, thank you very much. Let's get right to the numbers. It is an interesting trading day. Right now, the S&P is up a point, has been fluctuating. The Dow up 6. NASDAQ on the minus side now, down 30 points. That is a drop of 0.3%. The 10-year, the yield there, 0.58%, up 3/32. Stocks have been fluctuating near 5-month highs as investors weigh the likelihood for a new spending bill, potential coronavirus vaccines, and an escalation of tensions with China that could spill over into trade. We'll be exploring all of those topics today right here on Bloomberg Business Week. Gold surging $22 the ounce, up 1.2%, $18.64 right now. And West Texas Intermediate crude lower a little change, down 3 cents, $41.88 right now for a barrel of West Texas Intermediate crude. After the bell, a couple of high-profile earnings. Microsoft shares up 0.6%. Tesla up now by 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. This portion is brought to you by Commonwealth Financial Network, delivering the support you need to enrich the lives of your clients and build the business you've always dreamed of. Visit commonwealth.com to learn more. And so much ahead on this show. But let's jump into the Business Week agenda, Carol, because I do want to understand this trade. When we were getting ready to come onto the show, we have a little huddle with our team, and we look at what's driving the trade, and we're looking at the trade like, oh, I don't know. It's sort of like,
They're all waiting for Microsoft and Tesla after the close.
It's exactly what I was going to say. I mean, I think that this is one of these weeks where there are some bellwether names, to say the least, and both of those certainly. One has dominated the market for a long time. The other has certainly dominated for a while. Let's get into it, setting the Business Week agenda with Vildana Heinrich back with us, cross-asset reporter for Bloomberg. She's on the phone in New York City. Dave Wilson, our stocks editor for Bloomberg, he is on the access line. Dave, talk about the contours of the trade here.
Well, I mean, if you look at what's going on within the 11 main industry groups of the S&P 500, you see sort of the interest rate sensitive areas of the market at the forefront. You know, utilities and real estate, they're the two best performers. On the other hand, you know, yesterday, I mean, energy stocks were really leading the parade, you might say, and today they have the biggest decline. So, you know, what happens one day gets unmade to some extent the next. And beyond that, I mean, you've seen some positive responses to earnings. You can talk about especially HCA Healthcare, which really jumps out, given that they're a hospital owner and been dealing directly with the effects of the coronavirus pandemic. Nonetheless, you know, their second quarter earnings and revenue beat analysts' highest estimates, at least the ones we surveyed here at Bloomberg, and the stock's up 11%. And we have seen some strength in healthcare companies reporting earnings. You know, on the other hand, you can look at a Texas Instruments, which was out late yesterday with their quarterly results, and the shares are down 2.7%. So there is some back and forth going on here, and that's playing into the lack of direction that we're seeing in the broader market at this point.
Yeah, utilities and real estate, your two top performers in the S&P 500. Vildana, come on in, because you two have been watching the markets, talking to traders. You know, we watch those virus numbers continue to climb, certainly in different parts of the country and overall. But again, overall, we see the equity markets continue to climb as well.
Exactly, and my colleagues and I have been really looking into this to see how some of the virus trends and virus data are figuring into investors' minds. And largely speaking, the virus trends haven't really been bothering investors as much. It's not to say that they're not paying attention to them. It's just that when it comes to the stock market, investors have been been able to look past a lot of the data. They're looking ahead. They're potentially seeing some trends that are getting better and hints of improvements, especially in some of those hard-hit states like Arizona. And if I can just give one quick example, I know Tom Lee at Fundstrat has been paying attention to Texas, Florida, California, and he says that some of these states, they're showing that cases maybe are starting to abate, and that the level of anxiety and panic will start to recede, and that is going to be good news for asset prices going forward.
Well, we certainly hope that that's the case, although my concern is that if people say, oh, it's abating a little bit, it's like, let's reopen again, let's get out there. I mean, I say that only half-jokingly in many ways. I mean,
and on a day, Jason, where we've got global numbers for the virus topping 15 million in California, we heard, I think Charlie mentioned this, you know, surpassing New York as a state with the most confirmed cases, right?
Wow.
And just think about when we were, you know, early on in this, you know, we were listening a lot to New York and California, right, on their handling of the virus, and they seem to both get control of it. And here's California having a tough time.
Yeah, absolutely. All right, Dave Wilson, give us a quick tease for your chart and stock of the day. I'm going to give you a double tease.
Well, okay, I'll give you the chart first. It's all about Tesla. I mean, the question is whether this company goes into the S&P 500. I'll tell you, it's already more valuable than entire industry groups at this point if you look around the world. And as far as the stock of the day, think bargains.
Yeah.
All right.
I like that.
All right. Dave Wilson, thank you so much. We're going to catch up with you at 3:30 for the chart, just after 4 for the stock of the day, Carol?
We're going to break down those Tesla earnings after the close. We're also going to break down Microsoft. Tesla, though, is an interesting one because as Tesla's share prices hit certain marks, that means a ton of money for Elon Musk. And there's been some interesting stories, certainly on the Bloomberg, about that. And we'll maybe talk about that a little bit later on.
Yeah, before we keep talking about what's going on in the rest of the show, I do want to thank Vildana Hira. Good to hear from her, our cross-asset reporter for Bloomberg. She and the team doing some great work. I mean, amid this market, Carol, that we are constantly trying to figure out and, cross-asset, like cross-wins in many ways that we're just seeing on a day-to-day basis.
Well, man, you've got the virus and now you've got China. And I mean, I feel like to some extent investors are getting used to both of these when it comes to headlines and headlines that, could potentially upset the markets. And we're going to talk about them a lot over the next couple of hours. Dr. Susan Bailey is an allergist, immunologist. She's the new president of the American Medical Association. So she's going to talk to us about the virus. And then our resident expert on U.S.-China relations, Bloomberg New Economy editorial director Andy Brown. We knew that as soon as we saw this China story, we're like, we got to talk to Andy.
We got to talk to Andy, yeah. Absolutely. I saw something earlier on our Markets Live blog that essentially said the market in part is shrugging this off because nobody said anything about the trade deal. That basically that's the thing the market cares about. The market basically cares about, all right, you can do something with a consulate, you can do something with an embassy, you can, rhetoric. Are you messing with the trade deal? Is this going to affect the flow of goods back and forth? Is it going to affect a company's ability both to manufacture and to sell into China? No? Okay, cool. Like, whatever. Like, we're moving on. So it's interesting.
Yeah.
The cover story of the magazine, can't wait to talk about this. This is such a great story. Ben and Jerry's, I love their ice cream. And I have to say, from a personal perspective, have always admired their point of view in many ways, or their willingness to have a point of view, even as part of a big company, the CEO of which you've interviewed.
Unilever, massive company. So that idea of putting together purpose and profit, they are doing it. Also, the former chairman of JetBlue, he's going to be with us to talk about that industry and leadership. Let's get to the Bloomberg Business Week Bite of the Day, one number that tells us a lot. It is 960. LinkedIn has eliminated almost 1,000 jobs after the virus pandemic curbed demand for the company's recruiting tools. A total of 960 roles will be cut. That's about 6% of LinkedIn's workforce. The reductions are happening in the company's global sales and talent acquisition departments. This is, again, you look at the virus story, you understand the immediate impact, but then there's, peripheral impact. And this is what that story really is about.
Yeah, I have to say I was a little bit surprised about this because I felt like LinkedIn might be doing okay amid all of this virtual world, but listen, it's tough out there, that's for sure. All right, let's get down to Washington. Nancy Lyons is there with World and National Headlines. Hey, Nance.
Hey, Jason. The Trump administration and Senate Republicans are apparently mulling over a short-term extension of unemployment insurance while a broader package is negotiated. The scope of the extension is unclear, but Senator Rob Portman tells Bloomberg it's important to do something before the $600 a week extension expires next week.
You have a cliff there, and I think most of us agree there needs to be something in its place.
The Republican plan is expected to be roughly $1 trillion. That compares with the $3.5 trillion package already approved by House Democrats. There are only a few weeks left before Congress leaves on a scheduled August break. This afternoon, the House is voting on a proposal to remove Confederate statues from the U.S. Capitol building. Majority Leader Steny Hoyer says it's time.
Defenders and purveyors of sedition, slavery, segregation, and white supremacy have no place in this temple of liberty.
The Senate would also have to pass the legislation. The U.S. has shut down China's consulate in Houston, saying it's because Beijing is violating international law and stealing intellectual property. Secretary of State Mike Pompeo addressed the situation while in Denmark today.
We are setting out clear expectations for how the Chinese Communist Party is going to behave. And when they don't, we're going to take actions that protect the American people, protect our security, our national security, and also protect our economy and jobs. That's the actions that you're seeing taken by President Trump. We'll continue to engage in this.
A Chinese foreign ministry official calls it an outrageous and unjustified move that will sabotage relations between the two countries. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Nancy, thank you so much. You're listening to Bloomberg Business Week.
We have a really cool story to talk about, interesting story, but I just want to put out a headline. California reporting a daily record of 12,807 new virus cases. That just crossed the Bloomberg.
Yeah, interesting. Another headline that we should note is Twitter's Jack Dorsey. You just dropped this into our chat. Invited to House hearings set for Monday. Of course, a lot of the social media and tech companies having their chiefs called onto the proverbial Capitol Hill carpet there. So we'll certainly be keeping an eye on that. Meanwhile, another thing we are keeping a close eye on, and it actually came up in the White House press conference yesterday, is the arrest and trial of Ghislaine Maxwell, of course, known associate, friend, and former romantic companion of Jeffrey Epstein, the late Jeffrey Epstein. She is facing a number of charges, and we're all about following the money here at Bloomberg, and this is an interesting trail. Some great reporting by our Neil Weinberg, noting that J.P. Morgan banked millions for Ghislaine Maxwell. The banks haven't been identified publicly, but folks in the know, as you might say, Carol, say that one of the banks is J.P. Morgan. They also had a relationship with Epstein to the tune of millions of dollars, and also because he was referring business to them.
Exactly. This is our most read story on the Bloomberg in the past 60 minutes. And yes, he was known, Epstein, was known inside J.P. Morgan for helping steer many of his wealthy acquaintances to J.P. Morgan's private banking unit in New York, which offered, of course, as you would expect, discretion and really, catered to those wealthier clients. Again, this is according to reporting. Maxwell had $10 million or more under management at J.P. Morgan Private Bank, according to two people with direct knowledge of the matter. So it's interesting. And apparently her money was handled by a team of people. Yeah. So not surprising. This has happened before, but it's interesting as we find out a little bit more about this story.
Yep, and we will continue to follow this one. We know it's of great interest to our customers, a lot of folks in and around New York. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Halfway through the trading week, it is now a mixed Wednesday as investors weigh the likelihood for a new spending bill, potential coronavirus vaccines, and an escalation of tensions with China that could spill over into trade. Pfizer shares, they're pushing higher after a massive order for a vaccine. Pfizer up now by 4.3%. Here's where we stand in terms of equity markets. S&P up 4, a gain of 1/10%. The Dow up 38, higher by 1/10%. NASDAQ lower, down 23 points, a drop of 0.2%. 10 years up 230 seconds with a yield of 0.59%. Gold up 1.3%. 1864 the ounce on spot gold. West Texas Intermediate crude down 0.1%. 41.86 a barrel. Lots of earnings after the bell. We'll have you covered on those reports as we get them. Tesla up now by 0.7%. Microsoft also after the bell, also up by 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Master, Jason Kelly on this Wednesday. Our next guest took over as president of the AMA, the American Medical Association, just last month. Dr. Susan Bailey is an allergist and immunologist, the 175th president of the AMA. She came into the job amid the pandemic and an inauguration, I should say, that was also had to be done virtually because of the situation. She joins us right now on the phone from Fort Worth, Texas. Dr. Bailey, so delighted to have you here on Bloomberg Radio. First of all, how are you? Congratulations, and tell us about life in Texas right now.
Well, thank you so much for the congratulations and for having me on your show. Aside from being very hot in Texas, the coronavirus is very hot as well. Texas is one of the many hot spots in the country for the virus, and many of our hospitals are full. And although we are seeing some little trends that we may be seeing a downward slide in cases, which I think is because of the mask mandates our governor introduced earlier in the month.
Well, let's talk about that, Dr. Bailey. As a physician and as someone who you and your colleagues have been tracking this so closely, I feel like some local and state and even federal leaders are getting religion, maybe a little belatedly, on the mask wearing. What effect will that have? I mean, is this the sort of thing that could really, as they say, sort of arrest this and really change the trajectory now that it does feel like we're all getting on board with this?
Wearing a mask should not be a political statement. You know, that being said, leadership and symbolism is very important in society. And the American Medical Association, the American Hospital Association, and the American Nurses Association recently released a statement that we are all in agreement that everyone needs to take the simple steps that we know will stop the spread of the virus by wearing masks, maintaining physical distancing, and washing hands. We agree with the CDC that everybody in the country ought to be wearing a mask.
I have to say, any of the experiences and interactions I've had, you know, with the medical community, certainly as certainly the New York Metro has started to open up and reopen up, you know, hospitals and medical centers for kind of routine procedures, you know, doctors, everybody's in masks. Like it's just the way of life, and they understand that. That's just the way it has to be to keep everybody safe.
Well, I think it's important to remember that back to business doesn't mean business as usual. I believe that we're going to have to observe our mask wearing, physical distancing, and hand washing for the indefinite future. We now have good scientific evidence to show that mask wearing does decrease the transmission of the virus. It protects the wearer. It protects the people that are near the wearer. And some have tried to make a controversy or a conspiracy out of changing recommendations over time. You know, nothing could be further from the truth. In the beginning of the pandemic, we did not realize how much asymptomatic spread there was out there. And we didn't think that wearing a mask would make much difference, and we wanted to make sure that there were masks available for healthcare personnel that were really getting heavy exposure to the virus. Now that we know that the virus is practically everywhere, we do think that masks for everyone are appropriate, even the cloth mask, and encourage everybody to wear them.
So, Dr. Bailey, talk to us about, we'll talk about vaccines in a little while, but I want to talk to you about treatments, because I feel like that's one of the things we've been talking a little bit more about this week, Carol and I have on this program, is sort of what's out there right now to treat this disease, because we know that a vaccine is months away, best case. What are you seeing in terms of treatments that are working?
Well, unfortunately, the treatment side of the equation is still very sparse. Everyone has likely heard of remdesivir, an antiviral medication, but that's being reserved for patients in the hospital who are extremely ill. It may work a little bit better earlier in the illness, but that's going to be limited by the amount of medication that's available. There's been some reports out of Great Britain that adding a steroid for severely ill patients can be very helpful. But other than that, the only treatment that we have really is prevention. There are a number of drugs in the pipeline, monoclonal antibodies and other therapeutics that we hope will, be able to be used to treat COVID-19 at earlier stages, but those are all still in the planning phase right now.
Yeah, only treatment we have is prevention. And that's an important part of the treatment, right, Dr. Bailey? Just got about 40 seconds. We're going to do some news, and then we'll come back. But that's an important part, prevention.
Prevention is key. Not getting COVID-19 in the first place is what we have to strive for. Wearing masks, physical distancing, washing our hands. Those are the best tools we have, and they work.
All right, Dr. Susan Bailey, we're going to continue our conversation in just a few minutes. Going to do a little bit of news and come back. We're going to talk about what you're seeing in terms of around the corona and vaccine. Also want to talk to you about the big question that's on everybody's mind, reopening schools, sort of what you're seeing in Texas, and maybe some of the conversations you're having with your colleagues, especially here in your new position as the president of the American Medical Association. So happy to have her with us.
Yeah, absolutely. And I want to talk to her a little bit about, what we got this week in terms of the vaccine, that you might need 2 vaccines,
right,
and production and what's entailed with all of that. So, and I just think in many ways, many would say that this is our kind of new world reality. So I want to see how she sees it. We are
Back to business doesn't mean business as usual. Add it to the T-shirt list.
It's going on the T-shirt list.
There
already
you go.
All right, you're listening to Bloomberg Business Week. Carol Massar, Jason Kelly. We'll continue with Dr. Susan Bailey, president of the AMA, in just a moment. This is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, we're going to continue our conversation with Dr. Susan Bailey, new president of the AMA. Such a rich resource for us, new in the job, but she's also an immunologist, so she understands this so critically, Carol. So many more questions for her.
Yeah, and I want to see what she thinks the next few months are for us, certainly living with the COVID-19 pandemic. All right, let's get back, though, to your top business stories and another check on the trading day. Here is once again Charlie Powell.
Hi, thank you very much. And here's what's going on. Carol Masser, S&P up 2 points now, little changed, up by 0.1%. The Dow also up by 0.1%, higher by 30 points, but a retreat for NASDAQ today, down 29. That is a drop of about 0.3%. 10 years up 230 seconds with a yield of 0.59%. Stocks are trading mixed as investors weigh the likelihood for a new spending bill, potential coronavirus vaccines, and an escalation of tensions with China that could spill over into trade. As for coronavirus and the vaccine, the U.S. has sealed a pact for an initial 100 million doses of a COVID-19 vaccine that Pfizer is developing with Germany's BioNTech. Pfizer shares up about 4.5%, BioNTech up by about 10%. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health. And on Bloomberg Television this morning, she talked about the vaccine development process.
We have a few candidates right now, which is incredibly promising and incredibly fast. But we have seen vaccines in other infections be immunogenic. And then when you get to phase 3, which is that space where you're saying, okay, does this really broadly protect the population, and can we move this into large-scale production and get a vaccine out to the world? Then sometimes in that phase 3, we don't actually get that broad protection that we need to have a successful vaccine.
And coming up, we will have more on this topic. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Texas Instruments after earnings down 2.4%. Lots of earnings after the bell. Tesla, Microsoft, the railroad CSX, and Chipotle among them. Briefly, gold up 1.2%, surging $22 the ounce, $18.63. Crude higher, little changed, up 0.1%, $41.98 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Let's get back to our conversation with Dr. Susan Bailey, president of the American Medical Association, newly minted, newly inaugurated. She joins us on the phone from Fort Worth. And we just heard an update from our friends over at Johns Hopkins via Charlie Pellet about the state of the vaccine research. Dr. Bailey, I feel like the last week or so, we're just getting these little headlines here and there, especially from an investor perspective, that makes people a little more optimistic. Is that optimism misplaced? What's the realistic view on a vaccine at this point?
Well, it is nice to get anything that closely resembles good news when you're talking about COVID-19. But I caution that it is very, very early. It's wonderful that the vaccines that we're seeing now, there are 3 that are the closest to actually being produced for the public, but there's over a dozen that are being studied. We think that they're immunogenic, which means it can give people antibodies to the disease. But the really important point, the reason you get a vaccine in the first place is does it keep a person from catching the disease when they're exposed to it? And we don't know that yet. COVID-19 is kind of tricky when people catch it and develop their own natural antibodies. We're seeing they don't last very long. And so will that happen with a vaccine? I think time will tell, and that's why phase 3 studies are so important.
So, I don't know. Nobody has a crystal ball, Dr. Bailey, and I understand that. And we're learning so much about this virus and treatments today, right, as we go. So how do you see potentially the next 3 to 6 months? What's our world look like?
Well, I think our world is going to look very similar to what it looks like now. I think we're going to have to put our priority on public health measures like wearing your mask, keeping your hands clean, physical distancing, opening up very carefully and very slowly. I'll be real surprised if we have a vaccine before the end of the calendar year that's been shown to be safe and effective. Vaccines are safe and effective, but we've got to make sure they work first. I think that hopefully we'll see some slowing down of the number of cases if folks, do their good old basic measures. But I think we're still going to kind of be in a wait and see kind of position to see how things pan out with vaccines.
But
in the meantime,
can I just ask you though, if vaccines are not the cure-all though, right? We still don't know. Then, I do wonder about what kind of world we live in.
Well, I'm hoping there'll be, the answer eventually. We just don't know how quick that's going to be. Okay. We don't know if you're going to need a booster shot. We don't know if you're going to need one every year like you do your flu shot, which reminds me we are really pushing hard for everybody to get their flu shot this year because of the pandemic. Hospitals, doctors' offices are going to be busy enough. Believe it or not, you can catch the flu and COVID-19 at the same time, which, oh gosh, you get really, really sick. So we're encouraging everyone to get their flu shot and do a little pre-planning because it may not be as easy to get. There's going to be plenty of vaccine available, but like your employer may not offer it anymore. It may not be quite as convenient to get one, but they certainly will be out there, and we encourage everybody over the age of 6 months to get a flu shot this year.
So, Dr. Bailey, before we let you go, I have to ask you, sort of in this new position, you have this vast membership, and I think we're all worried a little bit about doctors out there who have been on the front lines. How is it going, sort of generally, as you sort of touch base with your colleagues? How are people generally doing amid all this? So many months in.
Well, there's two very opposite ends of the spectrum. The frontline physician is working harder than they've ever worked in their life. They're exhausted. Many of them have become ill, and we've even had some deaths of physicians that are taking care of COVID-19 patients. But at the other end, physicians in outpatient medicine and in private practice are having a hard time keeping their offices open because people are afraid to go to the doctor, and some procedures have been shut down. So we're helping them as best as we can with, advice on how to keep your practice going. Telemedicine has been a fantastic advance, but there's no question the physician community needs a lot of support in many different ways right now.
Well, we're grateful for you for spending some time with us. We really appreciate it. And congratulations again on your new role. It's a big deal. Dr. Susan Bailey, president of the American Medical Association, joining us on the phone from Fort Worth, Texas, Carol.
And a big year to have to come into it and to step into these, these shoes in this position specificely.
Well, and we should
what's
say
facing the medical community.
Her predecessor, Dr. Patrice Harris, was very good to us amid all of this as well. So our thanks to her as well. And congratulations for a successful tenure there.
All right, coming up, we're going to talk about the cover story of the magazine, a fantastic story that's coming up.
Ben and Jerry's.
Ben and Jerry's. All right, let's get back to World and National News headlines. Back on over to Nancy Lyons in our D.C. studio. Hi, Nance.
Hey, Carol. The $600 coronavirus unemployment benefit is set to expire next week, and the administration and Senate Republicans are said to be working on a short-term deal to extend it while they work further on a more comprehensive plan. Labor Secretary Eugene Scalia tells Bloomberg the thought of extending a benefit for an unlimited amount of time should not be an option.
We're dealing with an extraordinary pandemic, but we can't put in place long-term programs while we try to deal with a problem that we are continuing to make headway against with the vaccine and the like.
House Majority Leader Steny Hoyer says he's not in favor of a short-term extension. He says people need to have longer-term security. Well, China says it will retaliate after what's being called one of the biggest blows to diplomatic ties with the U.S. in decades. We have more from Bloomberg's Amy Morris.
The U.S. gave China 3 days to close its consulate in Houston, Texas, a move China calls an unprecedented escalation. China says it will respond with countermeasures if the Trump administration doesn't reverse the decision. The State Department says it ordered the consulate closed to protect intellectual property, but didn't specify why the consulate in Houston. The U.S. has clashed with China over trade. 5 5G networks, territorial disputes, and responsibility for the pandemic. In Washington, I'm Amy Morris, Bloomberg Radio.
A federal judge is hearing arguments on Oregon's request for a restraining order against federal agents who've been sent to the state's largest city to quell protests that have spiraled into nightly clashes between authorities and demonstrators. The lawsuit was filed by the state's attorney general. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Masser, and a really interesting and important story from Miles Weiss and Hema Parmar, two reporters that we are always consider go-tos in this newsroom. Point72 Asset Management, of course, Stevie Cohen's hedge fund firm, named in two separate discrimination claims, Carol, including one from a former employee who was among the top-ranked women at Point72. Not good.
No, it's not good, and they do include names. Sarah Vavra, I hope I'm not mingling the pronunciation. She departed as head of global macro in October, so that's a pretty big position. Shannon Gitlin, she works in Point72's Investor Relations Department, both of them filing grievances with the Connecticut Commission on Human Rights and Opportunities, happening in recent months, according to some court documents and interviews with members of the body. Both individuals have declined to comment. Point72 representative that our team talked to, they also declined comment, but you got to remember, back in February, too, Jason, there was an associate director who claimed that Point72 hired and promoted more men than women and paid her less than male counterparts with equal or fewer responsibilities. That case was moved to arbitration last year, which takes us back to what happens at a lot of financial firms, that when you go in, you agree to arbitration, which is why we don't often hear about these stories or know all the details and what ultimately happens.
Yeah, Max Abelson has done some really good work on the arbitration world. Go back and check out some of those stories, some of the things that have happened across Wall Street. Listen, there is a reckoning going on, that is for sure. And I think people who for a long time were afraid to speak up for a lot of different reasons are speaking up now. And, you know, you like to see it across the financial world. You know, there was this whole sense when everything happened with Harvey Weinstein and Me Too in Hollywood that, you know, Wall Street probably was overdue.
Right. Well, and if there's still arbitration going on, right, it's going to be hard for some of these cases come to light and let everybody kind of learn a little bit more about what's going on in terms of the situation. All right, stick around. We've got the cover story for Bloomberg Business Week magazine. It has to do with Ben & Jerry's. That's coming up on Bloomberg Business Week on Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks continue to trade mixed as investors weigh the likelihood for a new spending bill, potential coronavirus vaccines, along with an escalation of tensions with China that could spill over into trade. NASDAQ is lower, down 10 points right now, has been swinging between gains and losses. It's been a volatile session. The S&P up 8 now, higher by 0.3%. NASDAQ, by the way, down 0.1%. The Dow Jones Industrial Average up 82, higher by 0.3%. 10-year up 1/32 with a yield of 0.59%. Gold surging 1.3%, up $23 the ounce at $18.65. And West Texas Intermediate crude down 6 cents, $41.86 a barrel on West Texas Intermediate crude. Microsoft options expiring in tandem with its earnings report suggest shares could rise to a record. The software giant scheduled to release fourth quarter earnings after the bell. Shares up by 1%. Also after the bell, we'll be hearing from Chipotle, the railroad CSX, and Tesla. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Well, I have to say, I think I can speak for you, Carol Master, when I say this. We always get a little bit of a sneak peek of what the cover story is going to be. Joel Weber, just for our planning and because we want to know, he gives us a little tip. And we were both so excited when this ended up being the story, in part because we love the subject, in part because we love the writers. It's a terrific one. It's all about Ben & Jerry's and Unilever. And Ben & Jerry's at this moment that it feels like it was made for. Yeah, so let's get into it. Jordan Holman is with us, as I mentioned, retail reporter for Bloomberg, on the phone in New York City. Joel Weber, the editor of the magazine, he joins us from Massachusetts. So Joel, tee this one up for us.
Well, within the last month, as Black Lives Matter started getting a ton of attention and the protest took off, the first company that actually was out of the gate with a response, and it literally just made all of us go, whoa, that was a really amazing move, was Ben & Jerry's. And Ben & Jerry's, it wasn't the first time they've done this. It is actually really part of the company's DNA, the corporate activism, the social justice. This is just almost the latest chapter of it. And when we saw that, Jordan actually was like, she was the one that said all that. And I was like, okay, why don't you turn around and write that story for us?
Go type that.
And that was, yeah. And that was, we pulled in Thomas Buckley, who knows the Unilever side of it, but that really became the expression of this. So Jordan, this company has been, really known for this from day one. I think the thing that you were able to really kind of bring to bear in this is like so many other companies fail when they try and do this. What makes Ben & Jerry's stand out?
Yeah, Ben & Jerry's, their statement just really hit. They said dismantle white supremacy. And what we were seeing with other statements is, Black Lives Matter and we support the community. But what makes them stand out is that they have a dedicated team that thinks about these issues every single day. So when a tragic incident like the killing of George Floyd happens, they don't have to scramble to get the resources or to think through this. They've educated themselves. They've done the homework. They've connected with partners like Color of Change and NAACP to get the wording right.
Well, and what's fascinating too, Jordan, is it is in such contrast to so many other franchises, institutions, and companies that really fumbled it.
Absolutely, yes. So Ben & Jerry's has, for the past few years, said we're going to focus on criminal justice reform. We want to understand how structural racism in the U.S. works. And you don't always get that intensity from other corporations in honing in on that. And one thing that Thomas and I learned from reporting on this is that when Ben & Jerry's launches a campaign, they'll spend a year thinking about the topic, thinking about criminal justice, how they can work with partners, how they can communicate that to customers who might not understand what structural racism is or the school-to-prison pipeline. And so that's why when a statement from them is released, it really hits and resonates with people.
Well, what's interesting, Jordan, is we had Bishop T.D. Jakes on our show yesterday, and one of the things that he said that I really took away, and I think Carol did too, was this notion of exactly what you're talking about, this intentionality. And he basically said, he was like, look, and he was being 100% serious. he said slavery was intentional, Jim Crow was intentional, diversity and inclusion have to be intentional as well. But it's not always easy, I think, to do that, and yet it is. And I'm joking a little bit when I say this. It's baked in many ways. I mean, it's there on the package. It's there in the company, and that goes back to the founders, right?
Yeah, so Ben & Jerry's has been around since the late 70s, and Ben Cohen and Jerry Greenfeld, the founders, they've always spoken up on issues that they think matter. And what's changed is that, it's become more structured, this team. So when they want to speak out on if it's climate change or if it's structural racism, like we're talking about, or whatever issue, they're being very intentional about what they want to say and how they say it. And for this story, we talked to the executive director of Color of Change, Rashad Robinson, who speaks to corporations all of the time. But he said what sets Ben & Jerry's apart is that they actually put that energy, the time, and he even joked, the flavor behind Black Lives Matter and the things that they care about.
Jordan, another element that I want to bring in here is how, Ben & Jerry's owned by Unilever now. Unilever, this massive portfolio of companies, and not always as sort of woke as Ben & Jerry's is, right? Like, this is also the company that does Uncle Ben's rice, and Asia, it has skin whitening brands in Asia that it's also trying to figure out what it's going to do. What has Unilever as a company learned from, having Ben & Jerry's as part of sort of its portfolio?
Yeah, this goes back to Jason's earlier point about the founders. So when Ben & Jerry's was being acquired by Unilever, the founders really fought for that independence over the social mission, that element that even though they're going to be owned by this conglomerate, they're going to still have this independent board to push the issues that they care about. And that has trickled down to other brands. You start hearing, back earlier this month, they said, hey, we're going to halt advertisement on Facebook and Instagram. And Unilever followed them, and other brands within Unilever followed that intentionality. So yeah, it starts with Ben & Jerry's, but they definitely have influence over this huge brand that they are a part of.
And that's what's kind
Another
of
thing I'll just point out there.
Yeah, go ahead.
Yeah, sorry, Carol. The other thing I'll just point out here, and I find this part fascinating. Unilever has a huge ice cream portfolio. Like Ben & Jerry's is one of many actually within that, which is, I just found that to be an interesting factoid, is like they clearly like the ice cream business.
Who doesn't?
Absolutely.
Well, I mean, it's an interesting point to point out, Carol. And I mean, and you've spent some time, Carol, with the Unilever CEO, and I mean, he's been thinking about these things, I think.
Yeah, I do think he thinks a lot about this, and I think, Jordan, you make a good point about the influence that Ben & Jerry's has had more broadly, right, on this huge, massive company, because I bet that there have been some interesting internal debates. Just got about 30 seconds here.
Yeah, I mean, going to your point, the CEO of Unilever said that he would consider selling off brands that couldn't operate in a way that improves society. Yeah. That is a clear example of how Ben & Jerry's has seeped into the culture of the bigger companies that they're a part of.
Yeah, that's amazing. All right,
Very
well,
cool.
It's a must-read for sure. Jordan Holman, retail reporter for Bloomberg, co-author of this week's cover story, all about Ben & Jerry's. She joined us from New York City. Joel Weber, the editor of the magazine, he joined from Massachusetts. And I have to imagine, Carol, it's like the swagger that the Ben & Jerry's guys have, like literally and figuratively within this company, being like, you got to have all these other brand leaders being like, I just, Ben & Jerry get to do it. I want to do it.
Well, it's a fun part in the story, too, that just talks about what they had to do to negotiate Unilever buying Ben & Jerry's. So, all right, check that out. And for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. Coming up next, we got to talk about one of the most read, has to do with U.S. and China on the Bloomberg. This is Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, July 22nd. Stocks are trading mixed amid plenty of cross-currents, including the possibility of a new spending bill, potential coronavirus vaccines, and an escalation of tensions with China that could spill over into trade. The S&P 500 index holding on to a 7-point gain has been a volatile session, up by about 0.3%. The Dow is up 90. That is a gain of 0.3%, while NASDAQ is slumping 11, down now by 0.1%. 10 years up 2/32 with a yield of 0.59%. Gold up 1.4%, up $25 the ounce at $18.66. And West Texas Intermediate crude up 1 cent, $41.93 a barrel. S&P swinging between gains and losses, utilities, real estate, and industrial shares gaining, while the energy and financial sectors are slumping. Pershing Square Tontine Holdings, that's the special purpose acquisition company backed by billionaire investor Bill Ackman, is jumping in its trading debut after raising $4 billion in an initial public offering. Ackman was interviewed today on Bloomberg Balance of Power on Bloomberg Radio and Television, and he talked about Tontine.
What's interesting about this transaction is every investment banker around the globe is aware that we've just raised the largest blank check company in the world. We've got $5 billion of capital that we're looking forward to committing to buy a minority common stock interest in a company. It's the only such pool in the world. I refer to it in a way as its own unicorn. And basically, we're in a unicorn mating dance. And we want to, marry a very attractive unicorn on the other side that meets our characteristics.
Tontine up by 8.3%. Just under an hour away from the latest numbers out of Tesla. The surge in shares of Tesla over the past month will face a major test when the company reports financial results. Tesla shares, they are pushing higher now, up by 2.4%. Also reporting after the bell, we will be hearing from Microsoft, up 0.9%. Again, recapping, equities trading mixed. S&P up 8. That is a gain of 0.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, so one of our most read stories, in fact, it is the most read story on the Bloomberg in the past 8 hours, has to be about China vowing retaliation after the U.S. forced the closure of its Houston consulate. Well, U.S. Secretary of State Mike Pompeo, Jason, held a joint press conference earlier today with the Danish Foreign Minister, and they did this in Denmark. Pompeo discussing the U.S. abruptly ordering China to close that consulate.
We are setting out clear expectations for how the Chinese Communist Party is going to behave. And when they don't, we're going to take actions that protect the American people.
And that is Secretary of State Mike Pompeo speaking earlier today in Denmark. Let's understand what this move means down in Houston. And for that, we go to New Hampshire and we check in with Andy Brown, the editorial director for Bloomberg New Economy. Absolutely our number one go-to voice for all things China. He lived there, he worked there, he's in charge of understanding this U.S.-China relationship and the global new economy for Bloomberg. So we're so fortunate. He was our first call when we're trying to figure out what's going on here. So Andy, this was a headline that I think grabbed all of us this morning, only because it seems surprising. What does it mean?
Look, this is a major escalation. I mean, we're moving towards a pretty serious diplomatic rupture. And you have to put this in the context of U.S.-China relations, which are really at a low that we haven't seen since relations were established in the 1970s. It's hard also not to look at this. I mean, I think you have to look at this in the context also of domestic U.S. politics. This is Donald Trump lashing out in any way he can now at China. This is you can't see this outside the context of sort of a distraction from the abysmal job that the White House is doing in the battle against coronavirus. It's part of a wider sort of anti-China hysteria, and we're going to see a lot more of this, in the run-up to the election in November.
Yeah, I do wonder, Andy, if Donald Trump wasn't facing re-election, would we see this escalation?
You would see rising tensions, but I mean these are very concrete actions, and the escalation you can see it quite clearly. I mean you had this tit for tat expulsion of journalists. You've had these sanctions against Chinese officials, including very senior Chinese officials, a member of the Chinese Politburo. You had this trial balloon last week, where the New York Times reports that the United States, the White House is considering banning all 92 million members of the Chinese Communist Party from coming to the U.S., which would pretty much put an end to trade negotiations. It would certainly stop President Xi Jinping from coming to the United States, and it would severely disrupt both academic exchanges and diplomatic dialogue. So, you're just seeing an escalation, and this is very clearly the most serious action to date.
Andy, I do wonder, and this may be unknowable at this moment, but if anyone were to know, it would probably be you, because I know you speak to CEOs, you speak to academics, and you speak to economists. If you're a multinational company and you have business in China, both selling to the massive consumer base there, maybe doing some manufacturing there, what does something like this and these continuing political escalations do for your strategy, especially given that it is of a piece in some ways, as you said at the beginning, with everything that we've been seeing? Like, what's the calculus here for a corporate leader?
Well, obviously, the thing that businesses fear more than anything is uncertainty,
right?
And this certainly injects a huge new. I mean, you talked about the unknown. Nobody really knows where this is going. I mean, Ray Dalio, just the other day, he wrote a very long 8,000-word posting on LinkedIn saying that he thinks that this trade war could possibly lead to a shooting war, to a hot war. Wow. So businesses are looking towards a future of incredible hostility between the world's two largest economies, and all businesses are worried that eventually they're going to have to choose. I mean, if we're moving into this bipolar world, two technology stacks, a renminbi block, a U.S. dollar block, two trading systems. I mean, that seems to be the way the world is moving, at the very least. I mean, it adds uncertainty, and of course, it adds huge costs to businesses who have to navigate all this.
Andy, you're someone who has, as Jason said, you lived in China, you understand this. I mean, do you find it surprising that this is where we are at this point?
Not really. This has been building for some time. The decoupling has been progressing and accelerating, I would say, under the Xi Jinping administration. China is now, set on a course of self-reliance. It's determined that the United States wants to throttle its rise, it's looking forward quite actively now to preparations for a full-on financial confrontation. I mean, we've seen it on the trade side, we've seen it on the technology side, on the talent side, and now very senior Chinese officials talking publicly about the need to turn the RMB into an international currency. We can't rely on the dollar anymore. They're talking about the dangers that their own investments in the United States face now, potentially, demands for reparation from the United States over COVID-19.
Right.
So the Chinese are preparing for a full-scale rupture, and it has been building for a while.
All right. Well, we're so grateful to you for spending some time with us. Andy Brown, editorial director for Bloomberg New Economy, joining us on the phone from New Hampshire. Timely and on it, as always, Carol.
Yeah, it's a huge story. It's a remarkable story that will have consequences, certainly on the financial world and certainly the business world. We're already seeing it. All right, let's get back to world and national news headlines. Let's toss things over to Nancy Lyons. Hi, Nance.
Hey, Carol. California has surpassed New York as the U.S. state with the most confirmed COVID-19 infections. There are around 409,000 confirmed cases in California, 408,000 in New York. With cases cases on the rise throughout the country, the chief of the Federal Emergency Management Agency, Peter Gaynor, answered questions today from the House Homeland Security Committee. Bloomberg's Irv Chapman reports.
Chairman Benny Thompson asked Gaynor why members keep hearing from hospitals in their districts that personal protective equipment is still in short supply.
We are in competition still for PPE around the globe. We don't make it here in the United States. We make very, very little. We make virtually no rubber gloves in the U.S., as an example. The commercial medical grade distribution is very healthy today.
Gaynor said U.S. production of crucial supplies is being ramped up, but meanwhile his job has been not managing resources, but managing shortages. In Washington, Irv Chapman, Bloomberg Radio.
Senate Republicans in the Trump administration are struggling to reach a consensus on the specifics of another stimulus plan, putting at risk the White House goal of enacting a package before some of the benefits expire at the end of the month. One idea is to address the coronavirus unemployment benefit and then deal with other issues later. Senator Rob Portman tells Bloomberg this is a nonpartisan issue.
This is a crisis. You know, we need to respond to it. We can't play politics as usual here. And if we do that, I think we can get something done, even by the end of next week.
Any Republican plan would need to make it past Democrats who are staunchly opposed to any coronavirus liability limits for businesses and other organizations. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Masser here with you. Well, you know, we're starting to see decisions get made around schools. We're starting to see decisions get made around workplaces. Yeah. And Cantor Fitzgerald, well known to our Wall Street audience, obviously, they're going to pay new analysts to basically not start until 2021.
Yeah, they're deferring start dates for some of their junior bankers, as you said, until 2021. I mean, they're trying to figure out, you know, how do you operate through the virus? According to, again, people familiar with the story, Jillian Tan, Bloomberg News, putting out this story
Scoop
on the Bloomberg.
Machine.
Yeah, she really is. New arrivals, apparently, with the rank of analysts will be compensated if they have to wait. According to those in the know, the decision might delay start dates until mid-2021, another person said. Cantor's not saying anything, but we've seen this from some other firms. This story also mentions specifically Evercore. Yeah. They previously told their incoming investment banking analysts that it would offer them $25,000 if they delayed their start date for you. So in other words, you're hired, you're getting paid, but we give you extra money to start later? Is that what's happening?
Well, we're just going to pay you to. We're going to keep paying you, but you don't have to start yet. Okay. Is the way I read it. I mean, listen, this is a financial crisis throwback in many ways. Banks are trying to manage their costs. They're trying to manage, you know, where people are and where they're going to be, and the cost of actually having someone on board fully and in your facilities is different from just basically giving them a check, and there is a margin there that they're playing with.
There's a cost,
and so there is some cost savings.
And you can't bring them in and train. Like for many, you can't really bring them in.
Exactly.
And then so you can't really train them or get them into kind of the system. And so what do you do?
And there's some optionality here also that's built in, because if you basically say, hey, we're going to pay you something, don't start yet, then they can either say, okay, cool, we're ready now, or they can say, sorry, it didn't work out, but at least we strung you along a little bit, but we at least paid you while we were doing it. So it'd be interesting to see if other banks followed this model. We'll keep an eye on it. It's a great story. Check it out on the Bloomberg. This is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Late day rally. The Dow, the S&P, NASDAQ all pushing higher. In fact, the S&P, the Dow, best level of the day. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks climbing today with the Dow currently up 132 points. S&P's gained 15. NASDAQ climbs by 17. The U.S. 10-year yield at 0.59%. Gold trading higher by 24. WTI crude futures a little changed. And transports fall 30 points. Leaders to the upside in the Dow, Pfizer, McDonald's, and Dow Inc., while Goldman Sachs, ExxonMobil, and J.P. Morgan led to the downside. After earnings, Northern Trust fell as much as 9%. And in deal news, SoftBank's chip company arm is said to attract NVIDIA interest. And the FT reported that U.S. investors are trying to buy TikTok from its Chinese owner. In other news, Bill Ackman's blank check IPO began trading at $21 a share. And wrapping things up, it's a busy night for earnings with Chipotle, Las Vegas Sands, Microsoft, and Tesla all reporting after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Thank you very much, Bill. We are ready for those earnings and to hear live breaking news over your Bloomberg. Type squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate that update. So in our weekly Bloomberg Green segment, there is a story we want to get to. It's on how now everyone can make their wallet greener. I love the headline on this. Let's get more from Emily Chasen. She is sustainability editor at Bloomberg News, and she joins us on the phone in New York City. Emily, good to have you here with us. So what are we talking about?
Yeah, good afternoon, Carol. Jason, good to talk to you guys as always. So what we were looking at is sustainable finance in your whole wallet. We're always talking about sustainable investing, which is about $30 trillion in assets, but that's really only available to the wealthiest, investors out there and impact investors and just people who actually have money to invest. But there's a whole other group of financial interactions that people have every day in their wallet, right? And your bank deposits, your credit cards, and this is sort of a newer area in sustainable finance where customers can think differently about how they're actually making those purchases every day and can they make them more sustainably.
Well, and it's interesting because I know Carol and I experienced this with our teenagers who really are thinking about this on a daily basis. I mean, they think
Gives
about
me
it,
a hard time when I don't.
Oh, yeah. Yeah, true that. So what do we do? How do we do this? How do we please our children here?
Yeah, it's really interesting because people are very conscious when you go into a store. Am I buying like the more sustainable meat product? Am I buying vegan meat? Am I looking at, is there too much plastic and petroleum in this shampoo bottle, right? That's the kind of thing you have every day. But then when you look at your actual deposits and your credit cards and your bank account, you have to sort of ask yourself, what are they financing? So BNP Paribas Bank of the West came out this week with a new climate action checking account. It has a carbon tracking tool to find out if you've shopped at a sustainable store. It even has a biodegradable credit card. Also, MasterCard this week announced a plan to work with 60 different financial institutions to issue credit cards made from recyclable, biodegradable, or ocean harvested plastic. And actually, what's crazy about this is that 6 billion payment cards are produced a year. So that's actually a lot of plastic that can end up in landfills if you flush out your card. I know.
Yeah, it's a big deal, right? I know. You're like, are you blown by that, Jason? Are you
blown away. Blown away. Yeah.
Yeah. Well, it's a
but
lot
yeah,
of.
It's really about.
Go ahead, Em.
I was going to say it's really about what you're financing. So Bank of the West, when they're doing this climate action checking account, what's interesting about it is that the bank already has very strict policies on fossil fuel lending and tobacco financing, and so they said, we can really offer this climate action checking account because what your deposits are financing, we're very clear about. But that's not true at every bank in your wallet.
Yeah. What?
What did Al Gore have to say this week?
Yeah, we were also talking this week about the future of sustainable capitalism. We had that big Bloomberg Green event.
Yeah, congrats on that. It was huge. It got a lot of pickup. Tell us about it.
Yeah, and sort of we were all talking about the time is now to build back better, to rethink what we're investing in. And, one thing he made this interesting point is not doing ESG is sort of a violation of fiduciary duty today. And people used to think that
ESG was very, maybe you were violating your fiduciary duty to your clients by considering this is a factor. Now he says you're not.
Interesting.
If you don't consider it, you're probably violating your fiduciary duty today. So that's a big change when you think about the capital market.
That's a really big deal. That's a really big deal. All right.
Well,
so
because there's financial implications, though, right, Emily? Like there's financial, whether it's your impact on the environment or your if you've got a product that might, have an impact on the environment or an impact on people in a negative way, like these are things that are now we talk about a lot, but they ultimately will have potentially a financial impact.
Yeah, and I think you see that more than ever today with all these systemic issues in the market with the pandemic and with climate change. And there was a story today that, we're going to miss 2 degrees. The best case scenario is now 2.6 degrees. So we're going to live in a world that is much more volatile, and the financial markets are definitely going to have to respond to that. And even consumers can respond to that in their wallet.
Yeah, I love it.
Because that's what we need is more volatility. I will say, Emily, that Carol was very disappointed when I told her that you and Alex Steele and I, this time last week, went deep on cow toots. She was not happy that she missed it.
I actually, I beat him at the beginning and was like, I kind of really want to talk about cow toots. I feel like I missed out big time.
Yeah.
All right, I have a new article coming up on plant-based meat this week, so we will come back to it next week for sure.
Excellent.
I'm not going to be here again.
Oh, good Lord, Carol, you missed all the fun.
You just have to. We're gonna bring it up at some point.
All right, we're gonna bring it up. All right, Emily Chasen, thank you so much, sustainability editor. You can read more stories on climate news, science, and the environment. Go to Bloomberg.com/green. Tons of information there. There's also a lot of great interactive stuff too.
Yeah.
That's one of the things I love about the Green Initiative that Emily's working on with a big team here at Bloomberg. You're exactly right. It's one of our verticals, and so there's a lot of things that can really sort of demonstrate for you a lot of the issues facing the climate. And also do check out that conversation with Al Gore. It was a good one. You really saw it sort of blow up on Twitter a little bit. He's one of the voices you really want to hear from right now. And there's a certain element with Al Gore that's like, yeah, thanks for catching up, people. Like, I've been saying this. Hello.
Where have you all been?
Yeah,
What's interesting, though, Jason, it went from being kind of a feel-good, do the right thing to it now has a financial impact on companies, whether it's consumers don't want to be involved with companies that aren't doing the right thing. But ultimately, if you ruin the environment, there are legal implications. Like, there's a lot of reasons why there's a lot more momentum. And you can invest in it,
Yeah, exactly. Plus cow toots. All right. Coming up, we're going to get to Dave Wilson's chart of the day. Looking forward to that. And, of course, the song
may or
of the day.
may not be a T-shirt.
It may, yeah. I don't know. Maybe Alex Steele's going to make that T-shirt.
She probably has already.
She probably does.
All right, you're listening to Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So, Jason Kelly.
Yes.
In about, 30, 40 minutes, we should know the latest quarter for Tesla.
Yeah. You know who's happy at Tesla right now? Elon
Musk.
Yeah, to the tune of
Honey,
a couple billion
should we
dollars.
go out and buy an island, perhaps?
Yeah, exactly. I'll pick up the check, guys. Don't worry. Anyway, we're going to get into Tesla and much more. Dave Wilson is chart of the day. Well-timed ahead of those earnings. But first, Charlie Pellet. He's got an update on the trade. Hey, Charlie.
Well, hello there. Can't forget the song of the day coming up with Dave Wilson. Another song I probably won't know, but you guys will. Here's what's going on. 28 minutes to go ahead of the closing bell. S&P touching a 5-month high. Utilities, real estate, and industrial shares gaining, while the energy and financial sectors slump. Trump administration officials said to be discussing a short-term extension of unemployment insurance before the benefits lapse. A report moments ago from CNBC said Republicans are looking at a $400 number. Stocks, though, higher for a fourth day. In fact, a 5-month high on the S&P 500 index. Right now up 12 at 3269, a gain of 0.4%. The Dow up 124, up 0.5. NASDAQ up half a point right now, little changed at 10,680. 10 years up 230 seconds, yield 0.59%. Gold up 1.4%, 1867 the ounce. West Texas Intermediate crude, little change, down 0.2% now, $41.82 a barrel. United Airlines Holdings CEO Scott Kirby predicts that sales will fail to surpass half of last year's levels until there is a vaccine for the novel coronavirus. UAL down 3.6%, American down 0.9%, Delta has dropped 0.5%, Southwest lower by 0.8%. As we've been telling you, Tesla after the bell up now by 1.7%. We've got more on Tesla coming up in a moment. Also after the bell, Microsoft up by 1%. 3:33 on Wall Street. Time now for the Small Business Report. Here's Don Tucker.
John Handlery is owner and operator of the Handlery Union Square Hotel in San Francisco. We first spoke with him back on April 2nd. His family-run hotel was forced to close for the first time in its 112-year history. And now as California rolls back some of the planned reopenings, it's time to check in again. John, you must be something of the go-to guy for the other less experienced hotel operators in town there.
Funny you mentioned that. I've had a number of GMs call me and say, hey, Handler, you're the old guy. Oh, well, thank you. Anything else we can do for you today? And they said, have you seen anything like it? And whether it's my grandfather going through the Great Depression, my dad, World War II, or the Great Recession, this is different because people are told not to travel.
So at this point, do you have any clarity on when you can reopen?
Mayor Breed has us slotted to open for leisure travel September.
September is a long way away, John.
I'm well aware of that.
What sort of communications have you had with City Hall?
The Board of Supervisors has made life recently challenging. They passed a new health ordinance dictating to the hotels how we'll clean our rooms. And it wasn't involved with the Public Health Department, CDC, state health guidelines. It was just something that was done at a Board of Supervisors with input from the local union.
Another challenge. John, thanks a lot. John Handlery, owner of the Handlery Hotel in San Francisco. I'm John Tucker. That is your Bloomberg Small Business Report for today.
And we thank you, John Tucker, recapping S&P up 10. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thanks so much. You're listening to Bloomberg Business Week right here on Bloomberg Radio. I got nothing here. Carol Massar, Googling fervently.
Wait. Is it Jerry Harrison, Dave Wilson?
Oh, your Googling skills are in
Top
high
form.
esteem there, Carol.
She's good, Dave.
Now, Jason, can
Fast
you tell her
fingers.
who Jerry Harrison is?
I can't. Who's
No?
Jerry Harrison? No.
Well, I can understand that because, you know, David Burns had the show on Broadway. Chris France is coming out with a biography, autobiography.
Yeah.
Of course, he's married to Tina Weymouth. So we've already got the guitarist, the drummer, and the bassist of the Talking
Heads.
Jerry Harrison is
Wow.
the keyboard player.
No
Very
kidding.
cool.
I mean,
Yep.
it's interesting. Like now that you say it, like you can hear a little bit. You can hear a little bit of Talking Heads in there.
Yeah, absolutely. And this was a solo project of his
Yeah.
called Casual Gods, and that yielded the song Rev It Up. It seemed particularly appropriate for Tesla because that's what investors have been doing to the company's market value this year. They've been revving it up, all right. You go back to the beginning of the year, the electric car maker valued at just above $75 billion. You go to March, you saw it go down to $66.5 billion. And this week, it popped up above $300 billion.
It's unbelievable.
So it just goes to show you. And it was interesting, the other day, Jim Reed over at Deutsche Bank compared the market value of Tesla to the combined market values of automakers in the S&P 500, the Stocks Europe 600, and Japan's Topix Index, which is, you know, broad-based market gauge. So what I did instead is take those indexes individually and see how Tesla compared. And when you run those numbers, you find out Tesla surpassed the S&P group in January. And this month, it surpassed the group tied into the Stocks Europe 600. And it's really gaining ground on the topics. Let's not forget, that includes Toyota Motor and Nissan Motor and a bunch of other automakers. But the gap between Tesla and that gauge in terms of market value has narrowed by 65% this year. Now, we should put in a little bit of a caveat because in the case of Tesla, you're counting the entire market value of the company. And for the indexes, it's just the shares that are in the index, which, you know, take as an example. Elon Musk has a stake in Tesla. If Tesla goes in the S&P 500, they wouldn't count his shares as part of the value associated with the index. But they would in the case of the company. So that's, you know, a little bit of a difference there. But really the message is very much the same, that Tesla is becoming more and more dominant within the world's auto industry, and you can see it in terms of valuation. Now, whether that's going to be the case down the line in terms of his business is another matter. In any case, if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Can I just tell you, Toyota ADRs, I think, have a 22 billion market cap. Volkswagen has a 51 billion, the ADRs. GM is about 37.5 billion, and as Dave mentioned, almost $300 billion market cap for Tesla.
Yeah.
One thing to note, though, I mean, those companies are more heavily dependent on debt, a lot of them, than Tesla is. And that, no doubt, plays into the comparison of market values, beyond the fact that Tesla shares have just taken off this year.
Yeah, 283%. It's just like off the charts. All right, great chart. Speaking of charts, Dave Wilson with his chart of the day. Let's get back to world and national news headlines. Back on over to Nancy Lyons in our D.C. newsroom. Hi, Nancy.
Hey, Carol. President Trump is expected in minutes to expand a federal law enforcement operation currently underway in Portland, Oregon, to additional cities. Chicago and Albuquerque are two of the cities he's apparently targeting. Administration officials say agents were dispatched to Portland to protect federal buildings. Former Homeland Security Secretary Michael Chertoff spoke about that with Bloomberg.
It is not a license to go on patrol in the city streets simply because somebody somewhere in the city might decide at some point to attack a federal building.
Mayors across the country have warned the administration they will resist any attempts by the administration to deploy agents in their towns. New York has held the record for numbers of COVID-19 cases during the pandemic, but another state has taken over that record. California's cases have topped 409,000, now surpassing New York. The county's top infectious disease expert, Dr. Anthony Fauci, says right now we are losing the war on coronavirus.
We are certainly not at the end of the game. I'm not even sure we're halfway through. I mean, obviously, and if you want to do a score, I don't want to get too cute about it, but certainly we are not winning the game right now. We are not leading it.
At least 27 states have hit the pause button on their reopening plans or set new restrictions. The government has placed an order for 100 million doses of a COVID-19 vaccine candidate being developed by Pfizer and the German firm BioNTech. It's a deal close to $2 billion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Well, blank check companies, they're fascinating. They're a fascinating way to make acquisitions, and one of the most fascinating characters on Wall Street is tied up with one, Bill Ackman. I just want to read you this quote because you're going to pick your new garage band name from this quote, Carol. We're in a unicorn mating dance, and we want to marry a very attractive unicorn on the other side that meets our characteristics, Bill Ackman told our colleague Bonnie Quinn earlier, and we've designed ourselves to be a very attractive partner. So you can either have unicorn mating dance or very attractive unicorn as your garage band, whatever you want.
It's just kind of wacky, but it's interesting. Like in this environment, there's a lot of money out there, right?
Well, $4 billion now for Bill Ackman.
Yeah, exactly. And I think what'll be interesting is where he ultimately puts that money. And where he chooses to make his investments. So $4 billion is a lot, and you can make a substantial investment, whether it's kind of a mid-cap size company or you make, I don't know. We'll see what he does with it, right?
Well, here's the universe that he's looking at. He said there are 150 private companies valued at more than $10 billion in value, and that the top third of those, so call it 50, I would say, meet his quality thresholds. Looking for a simple, predictable, free cash flow generative company. This is Bill Ackman talking. Very high barriers to entry with minimal exposure to what we call risks. Extrinsic risk we can't control. We're looking for the super durable, great growth business that we can own for the next decade.
Wonder what that might be. Tick-tock, tick-tock.
Wonder what it might be, yeah. So we'll see. And listen, Bill Ackman, as I said, one of the most followed investors out there. He has made some great bets. Chipotle, we're going to hear from them after the bell, being one of them. He's made some crummy bets, Herbalife being one of them, and Valiant obviously being another. But he has done right by his investors, and he's been very successful of late as a public investor. So what he's looking at here will capture a lot of people's attention.
He is not, however, looking at energy companies, but those that will survive the virus. So just some clues there. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Late session surge. S&P up 18 now. That is a gain of 0.6%. The Dow's up 175, up 0.7%, while NASDAQ is up 19. That is a gain of 0.2%. 10-year yield 0.59%. Gold up 1.4%, rallying $26 the ounce at $18.68. West Texas Intermediate crude is down 0.3%, $41.81 a barrel. So a move higher for the Dow. The S&P and NASDAQ stocks advance for a fourth day on optimism about the likelihood for a new spending bill, potential coronavirus vaccines, and an escalation of tensions with China that could spill over into trade. We will be hearing from both Microsoft and Tesla after the closing bell. Right now, shares of Tesla are up 2.1%, Microsoft up by 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time. Oh, I'm sorry. Go ahead.
No, please after you, Carol.
All right, time for the drive to the close with Tony Roth. He's Chief Investment Officer of Wilmington Trust, $114 billion in assets under management. And he joins us on the phone from Cape Cod. Tony, we're just fighting to get to you.
We're excited to talk to you, man.
How are you?
Guys, nice to hear your voices. I'm good. Everyone's healthy up here. Not everybody, but everyone in my family and most people up here in Massachusetts has done well.
That's good. That's good to hear that. I do wonder, too, as you look at what's going on in Massachusetts and then you look at what's going on around the country, what does it tell you about kind of the economic health or economic environment and then ultimately kind of the corporate environment that we are in that leads to the investment environment?
Well, even in Massachusetts, people are very cautious, and many businesses are either not open or not operating anywhere close to capacity. And so what it tells me is that we still have a long way to go from a labor market standpoint, a small business standpoint, to get back to a healthy economic picture.
So around the country, Massachusetts, and then there's Washington. So a big debate going on, a lot of headlines coming out fast and furious as lawmakers try and get together. The administration weighs in. How much do you watch this sort of TikTok of that, Tony? Because ultimately, whatever latest rescue or stimulus or assistance, however you want to describe it, comes through is going to have a pretty profound effect, or its lack of is going to have a pretty profound effect on where we go from here. What do you make of the debate so far?
Well, yeah, it's a great question. And there are two things that we're very focused on right now, Jason, and that is, number one, what comes out of Washington in terms of the fourth package. And the second is the rate of COVID deaths. Those are really the two things that we think are the key leading indicators on the market. And in terms of the former, what's interesting, I think, is that you're seeing some positive upward movement in the markets today for the first time in a couple of days because meaningfully, because I think that the market is happy that the two sides are really starting to dig in and talk to each other. Yeah. And it's interesting that that's my interpretation, because when you look at the latest news that suggests that the GOP would support $100 a week rather than $600 a week in unemployment benefits, that's very negative news if that's where we were to land, because with the current benefits, they amount to about 15% of our total retail sales are essentially being funded through unemployment. And if that got cut that dramatically, that would essentially lose the funding for about 12.5% of total retail sales in the country. That would be very problematic.
Right. The repercussions, Tony, through the economy would be very dramatic. And when we talk about what kind of recovery it is, that we're hoping to have on the other side of this, it could certainly dampen it even more.
Absolutely. We're very dependent right now on the life support we're getting out of Washington in the form of extended unemployment benefits, unemployment insurance, as well as the PPP. And one of the things, Carol, that we're seeing is that if you recall the last 2 months, we had very positive, surprising labor market reports. The private data that we're tracking suggests that the labor market's rolling over, and that in July we can see a net loss of jobs rather than these big 3, 4, 5 million increases that we saw the prior 2 months. And that's for a variety of reasons, but including the fact that the payroll protection is running out and people are free to lay people off right now. So it all ties back to what's happening in Washington.
Right. Well, are you going to follow on that, Jason?
No, please.
Okay, so in keeping with Washington, I do wonder how much you think, Tony, too, about the elections, the outcome of the elections, and what that means for us getting control of the vaccine, and for what that means for our economy, and ultimately what that means for the markets. And also, I do wonder, as you watch the vaccine, if we start to see things improve, do you think it's more likely that Donald Trump gets a second term?
Well, a lot in that question. Let me start with one of the things that's very interesting around the market right now is that in a typical environment where you have a Democrat winning by 10 points in the polls right now, and winning in the electoral math by a significant amount as well, by the way, which is important to note. And the polls are better than they were last time around. And we've also got probably a 51% chance, if not better, of the Democrats flipping the Senate. Typically, that would be a death knell for a market rally because it means higher taxes, et cetera. But this environment's different because we don't know whether or not Biden would, yes, perhaps raise taxes, but also spend much more freely in supporting an economy and life support. And so the picture of the relative paths of a Trump versus Biden administration is quite obscure. And so the market really doesn't know at this stage until we get a lot more color on what their policies are going to be. More specifically, we get into the debates and stuff. The market's really not building it in one way or the other. And I think that our thinking is along those lines. We're really not sure. I will say that it is concerning right now from a short-term economic standpoint that the Republicans are quite reticent, as we've already talked about, to increase these benefits. A Democrat could be much more willing to open the wallet in those regards. So that's why the market doesn't know what to make of it.
Right. So, Tony, before we let you go, only about a minute or so left. I do want to take a minute on that second thing that you're tracking. And keep me honest, did you say the death rate rather than hospitalization or caseload? What's the important number?
Yeah. So what is going to really impact consumer activity is going to be the fear that somebody's going to go out and catch a horrible pathogen and die. It's not that I'm going to get something that's going to be a cold and then I'm going to get all better and move on. That is in fact the fallacy, I think, that has led to this new series of outbreaks, because a lot of people think, oh, I'm immune to it, I'm young, I'm healthy, it's not really going to affect me. In fact, what we see is that many people that have the virus, they get better, but they carry with them significant underlying conditions, maybe for the rest of their lives. We don't know that. But that's not really what's affecting behavior today. That's a subtlety that most people don't appreciate. What's affecting behavior is, if I get this, am I going to die? And up until today, we haven't seen a big spike in deaths. We just broke through 1,000 again on deaths. Interestingly, we saw the 10-year for the first time really go back down to get a 5 handle, 59 basis points today. It's been in the 60s for months now. So that's not an accident. As the death cases start to spike again, you're starting to see stress in the bond market.
Yeah, interesting. Wow. Well, that's a very good point and something to think about. We really appreciate the time. Thank you so much. Tony Roth, Chief Investment Officer for Wilmington Trust, joining us on the phone from Cape Cod, and we're just headed for the close here, Carol.
We are. I was thinking of what Dr. Susan Bailey of the AMA said, that we know right now the virus is everywhere.
Yeah.
And so that we need to kind of think about that as we get back, or try to get back. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell as we wrap up trading on this Wednesday, July 22nd. A move higher for the Dow, the S&P, and NASDAQ. This update brought to you by Witham, a forward-thinking advisory and accounting firm helping clients to be in a position of strength in the new reality of business. Learn more about their innovative solutions by visiting Witham.com. Stocks advanced for a fourth day as investors weighed the likelihood for a new spending bill, potential coronavirus vaccines, and an escalation of tensions with China. S&P at the close up 18 to 32.76. That was a gain of about 0.6%. By the way, year to date, the S&P now showing an advance of 1.4%. The Dow up 165, up 0.6%. NASDAQ up 25 for the NASDAQ Composite Index, a gain there of about 0.2%. Volatile session, 10-year yield 0.59%. Gold up 1.5%, 18.68 the ounce. West Texas Intermediate crude fell 0.2%, $41.83 a barrel. So again, S&P 500 index touching a 5-month high. As for what's behind the sentiment in today's trading, Tony Roth is Chief Investment Officer at Wilmington Trust. He was our guest moments ago right here on Bloomberg Business Week.
We're very dependent right now on the life support we're getting out of Washington in the form of extended unemployment benefits, unemployment insurance, as well as the PPP. And one of the things that we're seeing is that, if you recall, the last 2 months we had very positive, surprising labor market reports. The private data that we're tracking suggests that the labor market's rolling over, and that in July we can see a net loss of jobs rather than these big 3, 4, 5 million increases that we saw the prior 2 months.
Pershing Square Tontine Holdings, the special purpose acquisition company backed by billionaire investor Bill Ackman, jumped 6.5% today in its trading debut. Again, recapping here, equities higher, S&P up 18, up 0.6%. An update on Wall Street. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Move around. Motion creates emotion.
I feel the earth move under my feet.
You move like they do. I've never seen anyone move that fast.
Shake. All right, people, let's move like we've got a purpose.
Company's called Movers and Shakers. They cost a little more, but that name cracked me up.
Bloomberg Business Week. Movers and Shakers with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, let's get to it because we do have some big earnings already crossing the Bloomberg terminal, and specifically we're talking about Microsoft. Their numbers coming in, fourth quarter revenue, $38 billion, and that is a decent beat. That compares with an estimate of $36.54 billion, so that is certainly pretty significant. I want to take a look at some of the other headlines in terms of their earnings. Fourth quarter intelligence cloud revenue, Jason, $13.37 billion. That too was a beat compared with the estimate of $13.12 billion. Fourth quarter EPS, $1.46. That's 10 cents better than what Wall Street was forecasting. And I don't know, are you looking at the stock?
I am, and market's not happy with it. Down about 2.5% now. So we'll see whether maybe it's the outlook or maybe the market was expecting an even bigger beat. The good news for us, Anurag Rana is going to join us about at the bottom of the hour to break this down.
Well, and it could be too, you know, we've talked about some of these tech names. Stock's up, Microsoft heading into this earnings report up 34% in 2020. You know, we're watching the valuations of some of these companies. They've had pretty decent runs. And so it could be just investor perspective that, you know, we really want maybe even a more super beat, if you will. But we'll get some deeper analysis when Anurag joins us. And let's not forget, we're also awaiting some numbers from Tesla, which we will break down as soon as they cross the Bloomberg.
We will indeed. You want to take a look at what the S&P did today? Take it down a level, as they say?
Let's do it. It's been kind of a split day a little bit here. Let's take a look. So of the S&P 500, 369 names actually higher today. So a little bit more, obviously, to the bullish side here. 132 lower, 4 unchanged. But as Dave kicked it off, you know, healthcare is your number one gainer in the S&P 500. HCA up about 12%. So that was certainly among the names that were leading the overall S&P 500 higher today.
Yeah, adjusted profit there at HCA beating the highest estimate. So as you said, that was your biggest gainer. Also want to take a look at UAL, United Airlines, down again today. I mean, those airlines are just getting beat up. And we talked with our buddy over at CFRA yesterday, Colin, about what was going on there. Bleak industry outlook, I think, is safe to say. United Air is seeing sales capped at 50% of its 2019 level without a vaccine. That was basically the Bloomberg News takeaway there. WOA.
WOA is right. I do want to mention CSX also crossed the Bloomberg with its latest earnings report. And CSX coming out second quarter revenue, $2.26 billion, a little bit light. The estimate was for $2.29 billion. Second quarter EPS, 65 cents a share. That's a penny better than what Wall Street was forecasting. CapEx, saying it sees fiscal year CapEx at the low end of $1.6 to $1.7 billion. And a quick check on that stock in the after hours, just down a hair, down about 0.3%, 0.4%. Stock is up about 1% for 2020 overall.
There you go. And Best Buy, I want to take a quick look at that. Also out with some earnings. They, earlier today, maybe not surprisingly, more of the consumer wallet, as they say, going to electronics. People staying at home, maybe upgrading their kit, as they say, buying a new TV, investing into electronics because, listen, we're all at home a lot, watching a lot of TV, listening to some music, some tunes.
And apparently buying like washers and dryers and things like that, because Whirlpool just came out with their earnings, and they're noting huge demand recovery across all regions in the month of June. Second quarter net sales of $4.04 billion. The estimate was for $3.62 billion. So that certainly is a big beat. Second quarter ongoing EPS of $2.15, estimate of $1. Home appliance production rising 25% year over year in June. Home appliance sales rising 14% year over year in June. And a quick check on that stock, Jason, it's up about 1.6% in the after hours. So definitely on the move.
Quick look at the VIX as we await Tesla. The VIX down about 1.7%, closing at 24.43. It's Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson!
Hey, Mr. Wilson. Dave Wilson back with us. Bargain hunting, I believe, was the tease for this. Tell us about your stock of the day.
Ollie's Bargain Outlet Holdings. It's a retailer whose slogan is good stuff cheap. The company sells discounted and closeout items at 366 stores, mostly in the eastern half of the U.S. Ollie's was founded in 1985 and went public in 2015. The ticker is OLLI. The company's shares have been volatile the past couple of years. They peaked at a record in May of last year and then fell as much as 72% through this past March. Now Ollie's has made back the entire loss and then some. The share set a record today after the company gave forecasts for the fiscal second quarter ending August 1st. Ollie's is looking for sales to surge 40% at stores open more than a year. That would be the first double-digit increase as a public company. Ollie's also predicted operating profit will be about 16% of sales, and that margin is another record if it plays out. Not everyone was thrilled with Ollie's. I mean, Citigroup cut its rating on the stock to sell from neutral, yet the shares had their biggest gain since March. They rose 10.4%.
All right. Dave Wilson, thank you so much. Well, we are awaiting news from Tesla. We're going to check in with Ed Ludlow regardless, I believe, whether we see Tesla. He's been following that very closely. We got a live blog going. I mean, all eyes on Tesla, as they often are, in part because of Elon Musk, in part because it's now, what did we say earlier, $300 billion market cap company? Whoa.
It's massive. It's massive. Stock's unchanged, as you would expect, heading into the earnings. And we know the stock has been on a tear here in 2020. In fact, it's up about 280%. So we'll see and bring those headlines as soon as they cross the Bloomberg terminal. Just kind of waiting for that. In the meantime, let's get back to World and National News headlines. Let's bring in Ed Baxter.
All right, Carol, thank you. Well, California's hit a new record number of cases and surpassed New York
for the most confirmed cases overall. Governor Gavin Newsom in the state here says positivity rate in testing is concerning, and he delivered the message that any more reopening is dependent on strictly on personal behavior.
That contagion of good behavior modeled by others, particularly young folks in the state of California, to protect the older folks and themselves, the sooner we'll reopen these schools, the sooner we'll get back to business, the sooner we'll get back to the kinds of activities that so many of us understandably miss and demand in a free society.
He says a dent in the curve did happen, but mixing and social behavior now at this point has to be managed. New York State Governor Andrew Cuomo, much better news.
We are doing better than we had anticipated, and the phased reopening worked.
In New Jersey, Governor Phil Murphy says the GOP and the president nationally have to make money available for schools.
This is a slap in the face of every governor across the country, Republican and Democrat, who have shouldered the responsibility of responding to this pandemic.
And speaking of schools, a brand new AP NORC poll shows only 1 in 10 people think schools should reopen without restrictions, and only 3 in 10 think kids should be sent back to classrooms at all. In Hong Kong, local cases have hit a record 105. The government calls it a most severe situation. And Tokyo's Governor Yuriko Koike has advised residents to avoid unnecessary trips outdoors over the long holiday. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed, thank you very much. You're listening to Bloomberg Business Week. I do want to mention Chipotle, that is just crossing the Bloomberg, Carol, the redhead. Comp sales down 9.8%. That is actually better than an estimate of down 10.8%. I think my sons are responsible single-handedly for that. Second quarter EPS 29 cents. That's a beat. The estimate had been for 28 cents. Let's see.
Stock is down 3% here in the after hours. So there's got to be some disappointment maybe, though. It's up about 41, almost 42% so far in 2020. We've seen quite a dramatic bounce back in this name, so it looks like a little bit of disappointment coming in on that one.
You know who's disappointed as well?
Who?
Professors over at Rutgers. They filed a lawsuit against the school seeking an explanation of the transfer of $100 million to the school's athletics program, Rutro. The labor group representing the professors says that since the outbreak of the pandemic, the university has laid off 20% of its adjunct faculty, asked other unions to accept furloughs, and declared a fiscal emergency, while money is being used to subsidize the athletic department. Rutgers Athletics, quote, has been a financial black hole for a long time, but in the past year, the university transferred more than $100 million in all to the athletic program. They don't want to say why or where the money came from.
Sounds like a little bit of a black hole, and some transparency is needed. It's interesting. They brought a former head football coach to the school, bringing him back in December. It was an 8-year, $32 million deal. That's a bigger pay package than he received coaching the NFL's Tampa Bay Buccaneers, according to the union statement. Whoa.
Yeah.
Wow.
Yeah. I mean,
that's a state school.
That is correct. Yep. Yeah. I mean, there's a reckoning coming around colleges, college athletics. I mean, I think we're going to look back on 2020 as a seminal year when it comes to higher education. I just think it's inevitable.
I think you're right.
I know you and I are right in the middle of it with our kids in terms of preparation for that, but everything seems to be changing. It's Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, still awaiting the latest numbers out of Tesla. We did hear from Microsoft. Fiscal fourth quarter revenue at Microsoft up 13%, signaling persistently strong demand for cloud computing software and services that are helping businesses keep workers connected from afar. Sales, $38 billion. Estimates for the quarter were for just about 34 billion. We had the Dow, the S&P, and NASDAQ all advancing today. Late session rally. S&P 500 index climbing today by 18 points, up 0.6%. The Dow up 165, up 0.6. NASDAQ up 25, a gain of 0.2%. 10-year up 132nd with a yield of 0.59%. Gold up 1.4%, 18.68 the ounce. West Texas Intermediate crude down 3 cents, 41.89 a barrel. Again, recapping, stocks higher. S&P up 18, up 0.6. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. We have those Tesla headlines now. Let's give you the big ones. Second quarter revenue coming in at $6.04 billion. The estimate, that is a beat, was $5.40 billion. Free cash flow in the second quarter coming in at $418 million. The estimate there had been for a loss of $617.9 million. Tesla's second quarter EPS was 50 cents versus a loss per share of $2.31 year over year. So that's not an estimate. That is a year over year comparison there. The stock, Carol, is up.
Yeah, it's up about 2% here in the after hours, bouncing around, but definitely gaining some ground. We're going to talk Tesla in just a moment. Right now, we want to actually get into it with Bloomberg News reporter Ed Ludlow. He covers autos in the consumer world. He's joining us on the phone from San Francisco. So, Ed, good to have you here with us. 3.3%, 2.3%, that's the stock in the after hours. It's bouncing around. What jumps out at you?
Yeah, so I mean, in the last few days, momentum has gathered behind the idea that they would post a fourth consecutive profit on a GAAP basis. That has happened. And the interest, as we know, we've talked about, is around S&P 500 inclusion, right? And that is not still firm. It's quite a manual human process that the S&P index fairies go through, to go through whether they qualify or not. So that's not yet fully confirmed. So the assumption is that they will be added to the S&P 500. And it's important, right, for a number of different reasons. It's a multifaceted story. Part of it is just prestige. For many years, people have written Tesla off as not a real company, because of the scale that it operates at versus legacy automakers who build many millions more vehicles per year than Tesla does. It's been profitable on an inconsistent basis. But one of the key points that analysts stressed to me over the last few days going into this is that it is also about market mechanics. If you get listed on the S&P 500, then the passive funds and the ETFs come into play. They have to look at Tesla because they track that index. You also have active managers whose fund benchmarks or tracks against the S&P 500. So suddenly you have a lot more institutional money and passive money that looks to Tesla. And one of the things that analysts talked to me about during the week is that could bring some stability to the stock. Yes, it's seen this tremendous gain year to date, but it's also experienced bouts of quite extreme volatility. And with more institutional money involved, more longer-term shareholders, perhaps we could see some more stability around the Tesla share price.
It's interesting. The shares, giving back a little bit of their gains in the after hours, turning slightly negative now as people digest these numbers. I mean, there was a great story on The Terminal, Ed, that you co-wrote, that pointed out something really important coming into this. This was your preview. Tesla needs perfect results to satisfy investors after this surge. I mean, this surge in the stock has been unbelievable this year.
It has been unbelievable this year. I don't know whether this will be viewed as perfect results. Yeah. We'll have to wait for the earnings call and what the analysts say. I would say there is a lot that Tesla still has to answer for based on what the street was saying throughout the week. We want to know a lot of commentary around how they're going to pull off their delivery target for this year, right? Coronavirus has had impact not just on their ability to run the factories, both here in the United States and in China, but of course it's also impacted the supply chain. So we want to know about that. Going into this earnings, Tesla investors, the street, were looking at 500,000 vehicles this year. Okay, but how many about next year? And all of these big lofty targets that people have for 2025. A lot of that brings into question investment in CapEx. how much money is Tesla going to spend for the rest of the year? Are they going to meet that $3.5 billion capex target? Are they going to make quicker progress with the Gigafactory in Berlin? Because, you know, the trend that Tesla and Elon have displayed over the last 2 years is to kind of pull back on spending a bit, not put the capex in, not put the investment in. And I think now that what investors are saying and what they're asking analysts is when we're going to see Tesla accelerate the pace of growth.
Right.
When are these annual volumes of vehicles that they're manufacturing and then delivering going to increase beyond the hundreds of thousands of units to millions of units? You know, there's a lot of potential around FSD, full self-driving, the software capabilities of the car. But at the end of the day, they build electric vehicles, and that there is market share to be taken there, and that is a capital-intensive business. So I think that will be a focus on the call later on today as well.
We're talking to our Bloomberg News reporter, Ed Ludlow, on Tesla, the company just out with earnings after the close. Stock is up 1.6% in the after hours. You know what, Ed, though? I think an important part of this story is we keep saying Tesla, it's going to get harder for them because there's going to be more competition out there. Is it playing out that way? Because I feel like I can't tell.
This is something that I was writing about in January, that for a long time, the idea was that why is Tesla being priced so high? Because the legacy guys in Europe, the Volkswagens, the Mercedes, they will catch up. But quarter after quarter and now year after year, that's still not the case. There isn't really a competitive electric sedan on the market. There certainly is not a competitive electric SUV. And I think that now the narrative has kind of really changed. You heard me a moment ago talking about accelerating growth. It's less about Tesla proving it's a real car company, more about Tesla consolidating its position as the market leader, more about Tesla consolidating its position as first mover advantage, right? You know, they have a great base, whereas everyone else is yet to put a single car on the road. That's a pretty nice position to be in, especially if they manage to do so well in this quarter of all quarters, what I call the COVID quarter, the true quarter where all of us were at home, where we had double-digit unemployment, where spending, consumer, you know, psychology was so damaged. They seem to have been able to pull it off through whatever mechanism. So going forward, if things improve, that's a pretty good base to launch themselves from.
Absolutely. Well, the stock up about 3% now, and, you know, remaining with this target of delivering 500,000 vehicles in 2020. Shanghai factory first deliveries expected next year. Semi-deliveries to begin in 2021. Many more headlines to come. Ed Ludlow, our thanks to you, giving us some insights in real time. We know you'll be listening to the call, and we'll continue to watch this. We've got a Top Live blog going. Coming up next, we're going to shift our earnings focus to Microsoft. You heard those numbers. Investors a little disappointed there. We'll understand why with Anurag Rana. That's all coming up next here on Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, coming up, we're going to talk Microsoft earnings. A little bit of a different tone investors are taking with those numbers versus what they're saying about Tesla, Carol.
All right, looking forward to that. We're going to get into it. I mean Microsoft, right?
Yep.
Oh.
I said Microsoft.
Oh, I thought you
said Microsoft, and then I said it's different from what we just heard about Tesla.
Sorry. We are going to talk Microsoft. Lots of earnings. All right, we'll get to that in just a moment. Let's get back to your top business stories and I'll look at some of those earnings after the closing bell.
Hi, thank you very much. Here's what's going on. Right now, we have got Microsoft lower, Tesla higher, Microsoft falling after fourth quarter productivity and business processes revenue fell short of the average analyst estimate. Total revenue, however, still topped estimates. Shares of Microsoft down by about 2.5%. Tesla shares rallying after reporting a second quarter profit, says its goal remains delivering 500,000 cars this year. Tesla is awash in cash. Second quarter free cash flow, $418 million. Estimates were for a loss of $617 million. Still sees semi-deliveries beginning next year. Tesla shares advancing more than 2.5%. Also heard from Chipotle after the bell. Second quarter comp sales down 9.8%. Estimates were for a drop of 10.8%. Chipotle reporting sales for the second quarter that beat the average analyst estimate. Shares, however, are trading lower by 1.3%. United Airlines shares down today after earnings. It's cutting its average daily cash burn to $25 million in the third quarter from $40 million in the previous three-month period as the company braces for a choppy recovery from the coronavirus pandemic. Joseph DeNardi is an analyst at Stifel. He sees more consolidation ahead for the airline industry.
I think that the industry wants to consolidate. The DOJ has kind of been the limiting factor there. And so I think Southwest would love to strengthen their presence on the West Coast with Alaska. And there would be a number of airlines, Delta, United, the top two, that would be interested in JetBlue.
And JetBlue shares up today by 0.5%. UAL down 4.2%. Delta down 0.7%. Southwest lower now by 1%. It was an up day on Wall Street. S&P up 18, up 0.6. The Dow advanced 165, also up 0.6%. Nasdaq up 0.2%. 10-year yield 0.59%. Gold up 1.5%. 18.69 the ounce. And West Texas Intermediate crude down 0.1%. 41.88 a barrel. Recapping, Tesla rallying after hours, now up by 7.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yes, indeed. Tesla is rallying, but as Jason made the contrast, that's not the case with Microsoft. That stock's down about 2.6%, also out with earnings after the closing bell. Let's get into the reasons why. Anurag Rana is with us. He's Senior Analyst of Software and IT Services at Bloomberg Intelligence. That's our in-house group of analysts. He joins us on the phone from Chicago. Anurag, what's going on with Microsoft? Does it make sense that investors are a little disappointed here?
It doesn't make sense because they blew the quarter out it's just analysts were expecting 8%. They came out with 13%. And in this market where there is so much of macro, issues, I was a bit surprised to see that big, print, frankly. I honestly cannot find that many mistakes in the quarter at this point. Let's see what they have to say on the call about next year. Guidance could be tough because overall IT environment is tough. But other than that, I don't really see that many bad things here.
And so is this, this is an area, Anurag, that you know far better than Carol and I do, has been a bit of a darling overall. And Microsoft itself has been a bit of a darling for investors, certainly this year and for the past few years. Have expectations just sort of been so high that they have to beat in new and different ways?
Yeah, I think it could be a mix of expectations and valuations. And, the overall tech has been very strong for the past 4 or 5 months. This could just be, sell on the news kind of an instance. But just on the fundamentals alone, I don't see that much that's wrong over here. In fact, I see everything is pretty good.
Do you feel like, too, at this point, Anurag, that these companies and Microsoft should have some visibility, or would you expect to hear a fair amount, at this point? Because I think, we talk about constantly at this point giving companies a little bit of a pass. We certainly did, during the depths of the virus. But I do wonder, when do you, as an analyst, say, okay, guys, you should have some visibility and I want to know about it?
Well, luckily for Microsoft, they have good visibility because they have very large long-term contracts with companies. So that's, it gives them a fair amount of visibility, much better than most other technology companies. But at the same time, they're also dependent on transactional revenue, people buying PCs, people upgrading their software. LinkedIn, for example, we already knew going into the quarter that, things are not going to be the best over there. So we saw that, decline in revenue compared to the decline in the growth rate compared to what it was last quarter. But some of those stuff is actually expected. And in other areas, we expected high number in cloud growth to remain strong, which we also saw. So, nothing truly alarmed me apart from the fact that the street estimates were 8%. I wasn't expecting them to come up with, a double-digit 13% beat, actually.
And so, as you're starting to get a sense, we talked to you about IBM yesterday, I believe, Anurag, as you sort of start to synthesize things, what's the outlook for this corner of the market?
For Microsoft, I think is in a much better space than position than most of its rivals, largely because it has its hands both in the public cloud space, which is the fastest growing area in technology, and it also has a huge installed base of legacy products or companies that have used their technology in the last 2 decades or even longer. Now, as these companies upgrade their IT infrastructure, Microsoft is very well positioned to be in a large portion of that business, compared to the likes of Google or Amazon, just because they've had those older relationships and people are used to using their products.
Yeah, and I think what's interesting is some of the insight we're hearing on the call, or at least the release, excuse me. There's a line in our write-through by Dina Bass about how the corporate customers for Microsoft, they're signing up for subscriptions and online versions of its office productivity software to take advantage of programs like the Teams communications app. Right, Anurag? People have definitely tapped into kind of the suite of offerings, or some of them, especially if they've been working from home. There's definitely a lot of software and programs that have been helping a lot of companies and teams.
Yeah, that has been the bullish case for Microsoft for the past 3 to 4 months, ever since the pandemic hit peak, is because, Teams is becoming a very important part of enterprises. Just because, before, everybody had Office and Microsoft Word and Excel, but now with this new package, you get Teams as well. You can help in terms of collaborate with your team much better than in the pre-Teams era. So I think Teams has become a very big growth driver for Microsoft. And what it does is it actually expands its market, not just in the knowledge workers, but also in the blue-collar world where those people did not use Microsoft before.
All right, Anurag, we're going to leave it there. Anurag Rana joining us from our BI team. Thank you so much. Let's head out to San Francisco. Ed Baxter is there with some headlines. Hey, Ed.
All right, Jason gotcha. Burning files at the Chinese embassy in Houston, evidence that has been ordered closed by the U.S. government.
We are setting out clear expectations for how the Chinese Communist Party is going to behave. And when they don't, we're going to take actions that protect the American people, protect our security, our national security, and also protect our economy and jobs.
The U.S. Secretary of State Mike Pompeo also says U.S. intelligence shows the WHO was bought by the Chinese government. His word. He calls it a political, not science-based organization. More blowback on the Trump administration ordering military-type operations moving into U.S. cities. Former Homeland Security Secretary Michael Chertoff says it may not even be constitutional.
Both the president and the acting secretary have taken a very belligerent, aggressive tone towards the state and local officials. And that includes the president getting up and saying, we're going to go after the cities with Democratic mayors.
And New York Mayor Bill de Blasio says, don't you dare do it here.
What we see in Portland is that the federal presence is actually making the situation worse. And we cannot allow that here in New York City nor anywhere else in the country.
The Trump administration now is saying it's readying to send agents into Chicago and Albuquerque very soon. COVID-19, Dr. Anthony Fauci says buckle up.
We are certainly not at the end of the game. I'm not even sure we're halfway through. I mean, obviously, and if you want to do a score, I don't want to get too cute about it, but certainly we are not winning the game right now. We are not leading it.
Yeah, he says it boils down to responsibly reopening at an institutional and personal level. Global news 24 hours a day. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed, thank you so much. You are listening to Bloomberg Business Week. Well, certainly something of great interest to our listeners, Carol, and our Bloomberg customers. Taxes, where you pay them, who you pay them to. And New York, excuse me.
You okay?
Has a way, I'm sort of coughing about New York chasing people down for their taxes. New York has a way of finding you.
Well, here's the point. You know, people have been leaving New York City, certainly amid the COVID-19 pandemic. And we know that the taxes in the city are pretty steep. The city alone, it's almost a 3.9% income tax. And then you've got the state's top rate of 8.82%. And some folks think that, you know what, if you spend more than half of the year somewhere else, I don't got to pay these taxes. Well, folks, here's a reality check. New York State, you okay, kiddo?
I am.
Okay, well, New York State uses 5 primary criteria to determine a taxpayer's residency status. The home they live in, their business ties, where they spend their time, family connections, and the favorite, wait for it, the so-called teddy bear test, which is where they keep the items near and dear to them, like artwork, heirloom, and pets, and teddy bears.
And teddy bears, of course. Like, where does Alice keep
My
her
teddy
stuffed
bears
animals?
are here.
Right here. Actually, I can see all
Where
of
are
them.
the Frozen stickers?
Yeah, where does somebody? It should be the Anna and Elsa test, I think. I mean, let's update it a little bit. But yeah, I mean, this is.
You can't just say, I've been living here for 6 months.
Right.
And I don't have to pay your taxes.
Exactly. You got to figure it out. And listen, this is especially important because revenue is down across the board. New York has to have this money. They have to figure out. So they're not just going to be like, it's cool. I know it was kind of a crazy year. We'll get you next year. They're not going to do that. They got to pay their bills too.
Getting a driver's license, folks, not enough. Registering to vote somewhere else, not enough.
Yeah. Teddy bear test.
Teddy bear test.
Yeah.
If the Rembrandt is still in New York City, that's your home base. I'm just going to say. Could be also called teddy bear or the Rembrandt.
Yeah,
test.
teddy bear Rembrandt test, depending on your bracket. All right. More to come. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Tesla up now by 5%, posting a fourth consecutive quarterly profit, a milestone that paves the way for the electric car maker to join the ranks of the S&P 500 index. Microsoft lower after earnings. Fiscal fourth quarter revenue rose 13%, signaling persistently strong demand for cloud computing software and services that are helping businesses keep workers connected from afar. Shares, however, are lower after fourth quarter productivity and business processes revenue fell short of the average analyst estimate. Stocks rose for a fourth day as investor optimism over the likelihood for a new spending bill and potential coronavirus vaccines outweighed concern about an escalation of tensions with China. Today, the S&P 500 index picked up 18 points, a gain of 0.6%, bringing its year-to-date gain to 1.4%. The Dow up 165 points, up 0.6. NASDAQ up 25, a gain of 0.2%. 10-year yield 0.59%. Gold up 1.6%, 18.71 the ounce. And West Texas Intermediate crude fell 0.2%, 41.83 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Masser here with you. It is interesting to sort of see Tesla and Microsoft. They're very different companies, obviously, but hit within a few minutes of each other and just sort of take stock, as it were, of where they are as companies. And this is nothing against Microsoft because what a run they have had. Satya Nadella has really done, I think, by all accounts, a masterful job there. But it's interesting to think about what's going on with both of those companies.
Well, and I think about some of the coverage that has been in the magazine, specifically, you know, whether it's Microsoft and what Satya has done to Microsoft to really change the company, and the influence he has had on the direction, I think, has been pretty impressive. And, you know, no doubt about it, Elon Musk. I mean, these are both two leaders, you know, Elon, obviously the founder of his company, Satya coming in as a CEO, but nonetheless, two who have very clear decisions and have really shaped the direction of these companies. And listen, you know, even if Microsoft's down a little bit, it's had a great year, and it really has moved very aggressively into cloud and really adapted as the world has adapted to cloud.
Well, that's exactly right. And also, like, I think having a bit of a moment, you know, with Teams and things like that, obviously the cloud space has been brutally competitive. But, you know, as you say, Microsoft, this is still a stock that's up 34 and change percent this year as of the close today. And Tesla, I mean, it's a generational company in many ways. And, you know, and yet there's still some clouds on the horizon. Just reading a little bit about Tesla today, you know, the midterm outlook, some analysts have some questions about that. And we'll see what the rest of the year brings. And as they get into, you know, delivering millions of cars a year, which is a point they are not at yet.
No, exactly, right? To kind of grow into that valuation. I mean, it's really, to get your mind, you know, we said it was mind-blowing. Just to get your head around it, it's almost, you know, it's a $295 billion market cap. You're talking about a forward-looking PE of 318, a current PE of 688. So it's really got to kind of grow into that valuation.
And meanwhile, something they don't have to worry about that other companies certainly do is bankruptcy. But we have seen a lot of them.
Yes.
And we may see more if our next guest is right. And he tends to be. Edward Altman is Professor Emeritus of Finance at the NYU Stern School of Business. Heard of it? He joins us on the phone. The Z-score, Professor Altman. Remind us what this is.
Well, it's something that I developed more than 50 years ago, believe it or not, and it's still around and kicking. It's a model for predicting the financial health of companies, and particularly oriented toward predicting bankruptcy within 2 years. And believe it or not, it's probably more used today than ever before, even though, you know, it's an old model and looks at mainly financial data of companies as well as its stock price, and does a pretty good job.
Pretty good job.
Okay, ladies and gentlemen, time's up for today. Everybody who followed my trades, well done. £830 for today, not bad. I'll speak to you all, as always, tomorrow from 8 o'clock UK time. Have a great evening. Stay safe. Bye-bye.
To 90% range, and very likely it's not going to be off by much.
So you were the subject of a story in Bloomberg Businessweek last week, Professor Altman. You're predicting a surge, the Z-score, I should say, is predicting a surge in quote-unquote mega bankruptcies. Tell us what we may see coming up here.
Well, so far this year, there's close to 40 mega bankruptcies, $1 billion in liabilities or more. And simply extrapolating that for the rest of the year, you're going to get, over 70 probably. Leading industries, of course, are oil and gas,